corporation tax. So as things stand right now, corporation tax is at 19%. So it doesn't matter how much profit you make. Let's say your property business makes £200,000 profit every year. You pay 19% on that profit. I'm simplifying it because there could be other allowances like capital allowances, but just say your net profit after, or your taxable profit is £200,000. You pay 19% of that to HMRC. Now, if that business were in your own name, then you would pay tax at basic rate 20%, higher rate 40%, and additional rate 45%, depending on how much income you have, which at £200,000, all three of those would apply to you. So you would give a significant chunk away to HMRC in comparison to having a limited company. Although as the tax rules change in 2023, you'll have a tax regime for smaller companies and a tax regime for larger companies, and the larger companies will be paying 25%. However, what I would say to you is, if you qualify as a larger company and you've got to pay 25% tax, you shouldn't be bothered, because if your company gets to that size, you've done incredibly well. And I think the last thing on your mind that should concern you is paying 25% tax. And I'm saying that because I'm saying have the mindset to grow and not be too worried about just the tax bill on its own. You should be thinking about creating a legacy, creating a company which creates good income, good profits, creates jobs, contributes to the local economy, and that's more important than just worrying about the tax. You might find that odd coming from an accountant and a tax advisor, but the mindset for this, and the purpose of this video here, is to say to you, tax is important, you need to consider it, you need to think about it, but there are other things as well which are more important and override tax. So one of the earliest things I was ever taught by one of my mentors is, don't let the tax tail wag the dog. So obviously keep tax as a consideration, but don't do things just because of tax, because then you might do something to save a bit of tax and realize you've created a bigger problem over here, which wouldn't have happened had you not been too focused on tax. So you need to take a holistic view on everything. But for our purpose here today, let's assume you're a small company, you'd pay 19% corporation tax on your profits, as compared to paying personal tax at 20, 40 or 45%, depending on your profits. So the tax regime is lower for smaller companies in a limited company compared to individual properties or property in somebody's name or in a partnership.